the doomsayers and the people that are waiting for the market to crash, they're out in every single economic environment. They would be right in this instance because it's such a huge economic shock. But as you've said it, the reason why we didn't see a huge influx of supply is because the government provided us with an income. Interest rates are really low, so debt is very cheap to manage. And then you've also got major institutions such as the banks, not forgiving interest, but delaying the payment of interest or making the interest repayments less impactful. You don't have to pay them straight away. So, the system has supported itself, or the system has supported the real estate market so it doesn't collapse.
Yeah.
And where do we see things?
Oh, sorry.
No, you go.
I was just going to say, I think that is that would continue to be a key feature of a lot of regulatory policy, institutional policy, because real estate as an asset in Australia makes up more than half of household wealth. That means that it's an important pillar of the economy and economic activity, but it's also a very crucial implicit pillar of retirement, in the sense that when people get older, they use housing as a source of equity for healthcare, aged care, intergenerational wealth, supporting their family. So because of the reliance that has been built into Australian households on property, it is a sector that needs to have some stability and some protection around it. Same with the banking sector. About 60% of bank loan books are in the mortgage space. And I think, I don't blame doomsayers who were calling a 30% crash or whatever. I think a lot of people were thinking the housing market was going to decline. The key thing that a lot of analysts, and including myself, everyone I think missed, was we underestimated the institutional response. And I think we forget that the housing market doesn't operate in that perfect free market vacuum. It actually does have a lot of institutional parameters to keep some stability in the market.
There are a lot of vested interests in the real estate market staying stable. And you highlighted some key points that I hadn't thought about with retirement and healthcare and intergenerational wealth, but it's also just the building of it. So it provides a lot of jobs. It's a pivotal piece, and the fact that you've highlighted two other key factors that people don't think about is it represents more than 50% of people's household wealth, and then banks are out 60% of their loan books. So it's that's one of the reasons why I actually didn't see the market crashing, is because Peter and I, when we discussed it, we thought there is so much dependent upon this industry. I don't see how the government and banks would allow for it to have such a significant crash without everything falling over. It's really terrifying. Yeah. I thought if it falls over, like everything's gone. So it feels like we need to support it in its time of strain or in its time of dire need.
Yeah, they have the capacity to do that. I think we definitely saw that with the mortgage repayment deferrals. I mean, that's an interesting one because people will eventually have to, make up their interest costs and things like that. So overall, I think at the margin, it may create some more strain on households having gone through this period. But ultimately, it's reinforced housing as an important pillar of the economy, and they've really showcased what kind of measures regulators and institutions can go to support the asset.